Hey guys, I'm Ben, and as a seasoned credit user and credit card abuser, I've learned my fair share of tips, tricks, and hacks along the way. I have enough airline miles that I can fly anywhere in the world that I want. I can walk into any bank and get any loan available at the best possible interest rates. And I have enough credit cards where my cumulative available credit is over $500,000. I own significantly more credit cards than I own pairs of pants because credit cards are actually useful. I get massive sign-up bonuses with each one, and I get points every time I use that credit card. But pants, on the other hand, aren't that useful, especially during coronavirus where everybody's locked down and I can't even leave the house. I mean, seriously, I don't even know when the last time I put on a pair of pants was. You really don't want me to stand up right now. But even though I am now a seasoned credit warrior, this wasn't always the case. I grew up in a family where my parents instilled in me that credit cards were inherently bad and I should stay away from credit cards. And in my 20s, I was reading books by this guy and getting brainwashed into thinking that all debt was terrible, no matter what the purpose was. And then as time went on, I wanted to buy my first house because, that's the responsible thing to do when you become an adult. So I wanted to go and buy my first house. I sat down with the banker and they pulled my credit score and they just gave me this disapproving look like I was some sort of drain on society when they saw my credit score. Because when you're not using credit, when you don't have student loans, a car payment, or credit cards, you don't really have a credit score. So needless to say, the lender did not give me the loan. I walked out of that bank with my tail tucked way underneath my legs. And that's when I realized that credit is a tool. Just like a hammer or a screwdriver, sometimes you need credit in order to get the job done. So that's what we're going to talk about in this video, guys, is how to dramatically improve your credit score in a very short amount of time, in time for 2021 and the new year. Thankfully, 2020 is almost over. It's been a dumpster fire of a year. But 2021 at least still has some promise. So let's kick off the new year right. Let's start improving your credit score or establishing a credit score so that you can start 2021 off on the right foot. Now, I'm not a huge fan of the credit score system in general. I think there's a lot of ways to game the system and make yourself look like a much better borrower than you actually are. But even though the credit system is flawed, it is the system that we're stuck with. So you gotta learn to game the system. And in order to game the system, you have to know the rules. You can't win the game unless you know the rules. So the first thing that you're gonna be on the lookout for is your age of credit. Essentially, the longer that you have been using credit, the more trustworthy you are in the eyes of the lender. I mean, if you just got your first credit card last month, the credit card company doesn't even know if they're gonna get paid or not. They have no track record with you. You haven't even paid a single bill yet. You haven't established yourself as a credit user. The longer that you have been using credit, the better. Now, with the exception of becoming an authorized user on somebody else's card, the age of credit is pretty well set in stone. You can't travel back in time and open a credit card years in the past. You can only establish credit now and wait as your credit then seasons and becomes aged. And so since it's a little bit hard to manipulate this particular one except using authorized users, it's very important that you actually start establishing your credit as soon as possible. If you haven't already, it's time to start using debt so that you can start getting a credit history. Now, with this age of credit, it's very important that you actually go out and immediately start applying for these loans so that you can start building up this age of credit. Because when you actually need a loan, that is not the time to start worrying about your credit score. You want to start building your credit score now, such that when you actually need a loan, your credit score is already at a good point where the banks are basically just going to throw money at you for very low interest rates. So if you don't already have a credit card, it's time to go out and get one. If you don't have a student loan or an auto loan or a mortgage or some sort of a debt, you want to go out and actually get some sort of a debt. Now, I typically recommend credit cards because credit cards, out of all of the loan types, is the only loan type that will help your credit score that theoretically you will pay no interest or no fees on. Because if you use credit cards responsibly and you pay your bills on full every month, You will never be charged interest, and if you use the right credit cards, you will never have an annual fee. So it is a completely free way to start establishing your credit. Up next is your credit utilization rate. This is a ratio of how much money you're spending on your credit card every month as opposed to how big of a limit you have. Realistically, you want to use as little available credit as you possibly can. And this may sound a little bit counterintuitive, but when you use a lot of your credit, you actually look desperate. It looks like you really need that credit because you're poor. And banks don't like giving money and giving loans to poor people because they don't know if they're gonna get paid back or not. It's kind of like when Mr. Beast pretended to be homeless and walked into the Lamborghini shop trying to buy a Lamborghini as a broke homeless person.
What's up, guys? I accidentally gave all my money away to Twitch streamers and now I'm homeless. What does it feel like to sleep in it?
To sleep in it? Well...
Yeah? Have you ever lived in one?
I have not.
I was thinking of living in one.
That'd be a first?
Instead, banks like lending money to wealthy people that probably didn't need that loan to begin with. It's because they know wealthy people are realistically going to repay their debts. So the less of your available credit that you use, the more you're signaling to the banks that I don't even need your money. And counterintuitively, when you tell them that I don't want your money, they're willing to actually throw more money at you. And they throw this money at you by way of increasing your credit limits and giving you better interest rate loans. So if you currently have high amounts of credit card debt, it's time to buckle down and start paying that stuff down as fast as possible. This credit utilization rate makes up a massive 30% of your overall score, and it can be changed immediately just by paying down your existing debt. If you're interested in finding out ways to minimize your credit utilization rate on the best possible days to pay off your credit card bill, consider watching this video right here. Now, once you do have your credit card debts paid down to a manageable level, don't use your credit card very often, especially if you have a very low credit limit. By not using your credit card very often, you're guaranteed to keep that credit card utilization rate very, very low, and that is going to dramatically increase your credit score. So especially when you're first starting off and your credit limits are very low, I suggest maybe just putting one tank of gas or going out to a restaurant and buying one meal with your credit card, and then maybe just use everything else, pay cash or debit or something like that. That way your credit card bill stays nice and low and manageable. Whatever you decide to do, do not spend money on your credit card that you cannot pay off in full every month. And speaking of paying off your credit card bill in full every month, be sure you pay it off in full to avoid any late fees and interest. But you also want to pay it off on time because that is the single largest category when it comes to your credit score is, do you pay your bills on time? So when it comes to credit card debt, I highly recommend that you just simply put your credit card bills on auto pay. That way, every single month, money is immediately taken out of your account and completely pay off your credit card statement. That way, you never have to worry about closing dates or missing a payment or anything like that. That way, your bills are completely paid off every month on time, and you will never, ever miss a payment. And then next up, credit companies are looking at the types of credit that you have. They want you to be able to juggle a wide variety of loan types. So you want to have some sort of a revolving credit available, like a credit card, but you also want to have installment loans, something like a student loan or a mortgage, something like that. The more different types of loan products that you have, the better your credit score will be. So if you can just use these few simple tips and tricks, that will get you well on the way to improving your credit score dramatically. For more in-depth tips and tricks, be sure to subscribe, leave a comment down below. And now I have to awkwardly try to get up and turn the camera off because I'm still not wearing any pants. Until next time, I'll see you all again.